we're back. It's episode number 14 of the Braintrust Poker Podcast. We don't have the entire Braintrust here today. Jess couldn't make it, but we have Tom. I'd consider you like the prefrontal cortex, like the decision-making portion of the brain. So we have a very important portion of the Braintrust. And with us today is a man who actually watches all the episodes, commented on one of them, and I said, I've got to bring you on. Email me. We got to get in touch. We got to talk. And that is Paul. So Paul is here. Paul has an incredible background. We're going to get into all kinds of things today. And we're going to start with this thought. So I've been thinking about over the last 3 years or so that life, not every aspect of life. Let me clarify. Not every aspect of life, but most of life related to money is just a game. You're playing a game that's very similar to poker. And you're either playing and trying to figure out how to get better, or you're losing and you don't really know how to play the game. And Paul, is that a fair statement to say when it comes to money, that you're either in the game and figuring it out, or you're just passively losing the game?
Yes, unless you're dead.
Okay. So let's hear just a little bit of your background. Where did what's your history in finance and all that stuff? Because you have an interesting past.
Well, at the age of 23, I was playing lots of poker after graduating college, and I went broke at 23 after getting scammed in a home game. And I didn't find out until later. And it was the most humbling experience in my life. I went to my father and I said, "Dad, I wrote a check for $5,000 and I don't have any money." And so he gave me the money and he said, "Last time." So I played poker in Gardena until I met my to-be wife in 1977. She's a Korean lady, and she was among the top 5 worst poker players I'd ever met in my entire life. And she's vaulted to number 1 because the other 4 died already. and at that time, the game was 5-card draw, limit lowball. And if you knew what you were doing, it was hard to lose. I mean, making middle 6 figures a year playing medium to high stakes there are a lot of people doing that. And along the way, I met a guy named Stanley. And he was, 5'9", 400 pounds. And he was a complete degen, but an excellent poker player and an excellent talker. But he bet sports. So he ended up betting NFL games one weekend and he lost 15 out of 16. That's hard to do. Just as hard to lose 15 out of 16 as it is to win 15 out of 16. So he owed this bookie, $13,000. And he said, "Skinny Bob's going to kill me." And I said, "Really?" So I loaned him the $13,000. He gave me a bunch of jewelry, which turned out to be fake, as collateral. And he left me with one of the most important things that's ever happened to me in my life. He explained to me that in the game that I was playing, there was a group of 16 people that were playing one-way money. And in those days, you shuffled and cut and did everything with your own, everybody dealt their own cards. And these guys were the nuts. I mean, they had management locked up. They were paying off. I mean, they were just stealing like no tomorrow. They had their own language. They had an unbeatable spot. They sat right next to each other, 1, 2, 3. One collected the cards, one shuffled the cards, one cut the cards, the other one dealt the cards. The guy could cut 12 cards, 14. You tell him how many cards to cut, he could cut it. So I said, "Stanley, why are you telling me this?" He says, "Well, I owe you and blah, 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 blah." I was in a dilemma because if I use the information, I said to myself, I'm cheating. And then I said to myself, if I don't use the information, I'm screwing myself. So what do I do? So I was saved because I only got to spend a year and a half using this information, because then they brought dealers in. And when they brought dealers in, all these guys went busted. They had no idea how to play cards. All they knew how to do was cheat. It was hilarious, right? So I'm old enough now where they're all dead. So I don't fear any retribution. But some of these guys were some of the most respected people in the LA area. And it was just mind-boggling to find that out. And I suppose if you fast forward today, you'd find out the same thing about some of the more respected players in the Vegas area. So
are these guys are they card mechanics? Is that how they're?
Oh my God.
Yeah. Okay.
Oh my God. They could probably make the Jack of Hearts spit water in your ear or something like that. I mean, it was scary.
Okay.
So after that, I played poker until the mid 80s. And then I bought my father's business. And I had won a lot of money playing poker. And it was a great business until in 2005, I went broke again because I happened to be in the paper business. And along with paper being an obsolete, becoming more obsolete commodity, I was shocked to learn that the Chinese in 2005 started selling paper to my customers at less than I could buy it for. And I had this ginormous inventory in this ginormous building. And I went to Bank of America and I said, I owe you guys like $25 million and I'm going to go broke within 3 years. And they said, to my surprise, okay. And they helped me liquidate my inventory without collapsing the market. And I actually ended up owing a Chinese company $3 million after I finished liquidating everything. And they sued me. And another large company came in and said, I'll tell you what, we'll buy your company, we'll settle the lawsuit, and we'll start a new company, but you have to put up as collateral $2.5 million. And I scraped together $2.5 million, and I got to be a part of this big company. And it turned out I got scammed again because I only owned 45%. And they had a chain of people that were involved in purchasing where one guy got a commission, another guy got a commission, another guy got a commission. By the time the company that I owned 45% of was buying the product, we couldn't sell it for a profit. So I was responsible for 45% of the losses.
Jeez.
So at that time, my CPA, who has since died, had a brilliant idea. He said, the company that went bankrupt owes you a bunch of money and it's in limbo. So I got to buy a bunch of buildings that printing companies had abandoned in Tennessee. And they were for sale. I didn't know how to price them. It was like there was an asset. The first building I bought was 840,000 square feet on 150 acres of land. And they sold the building. I eventually bought it for $6 million, which is like, $7 a square foot. Turned out I overpaid. And once that happened, I got put on this list, sucker list, and I got people were sending me things about all these different kinds. I ended up buying two more buildings. So I owned 3 buildings. And I had, I took out 15-year loans. Banks were giving me ridiculous terms. The state of Tennessee paid half of my employees' costs, when I used them as a warehouse for 2 years. And
so this was all of this was leveraged on the money they were going to pay you because they owed you a settlement? The money you were using?
I was using my father's life insurance policy that was pledged to me.
I see.
And it turned out that the company that bought me and I severed ties, and they wanted collateral in terms of the first building. They wanted, I owed them at that time. I owed them $3 million, and I ran into this guy that was a special forces guy, and he owned a small paper company that also went bankrupt. And when he came back from his service for a year, he couldn't get a job. So he ended up selling drugs at a bar. And he got busted by the feds. And they said, look, we don't want you. We're not interested in you. We want the people that supply you. And he said, screw off. And he spent a year in jail. So after I met him and talked to him about that, I said, that's the guy I want working for me. That's loyalty. So He ended up managing all of the buildings. He did all the plumbing. He did all the roofing. He did all the electrical. The guy was a genius. I paid him $160,000 a year, and I felt guilty. I mean, he was just a gem. So at the end of 15 years, which is 2020, I ended up selling all the buildings to some group that came in and wanted to buy them. Made a ton of money. And I looked around, I looked up at God, and I said, I guess that's what you intended. I had no idea it was going to work out this way. And turns out you never do. You know, it's like, it's part of stoicism. When it's out of your control, it's out of your control. And I decided to start seriously investing. And I did a lot of research on options. And I found out that options and poker were crazily related in terms of risk versus reward, in terms of money management, in terms of controlling your ego, in terms of not going on tilt. And, I looked up and I said, my word, at that time I was 71, I'm 75 now. And I did a lot of reading, and I said, when you have a lot of money, your job is to protect it. Mm-hmm. And when you have a little money, your job is to gamble it. Because if you lose your little money, you can always get a job and build that small bankroll up again. If you have a lot of money and you lose it, you ain't getting no job where you can build that bankroll up to where it was again.
Sure, yeah.
And I moved to Vegas in 2009. I met a group of young poker players along the way. And they looked at me, I guess, as their grandfather. And we would get together once every 2-3 weeks. And they would get me stoned. And after I ended up talking to a potted plant, I said, I can't do this anymore. And so they said, here, we need advice because we know how to play poker. And they all are really, really, really good players. Mm. They said, but we have no idea what to do with our money. And I was really happy to help them or try and help them. And the sad part of this is that there were 8 of them, and I went 0 for 8. They all listened to what I had to say and went broke.
So let's, I guess, back to kind of that first question of like, if life is if the game of money anyway, I wouldn't say life, like relationships, I don't think are a game, community, family, faith, all that stuff. But the money and that side of things, I think there is like I guess a game or you could gamify money. If you were going to teach someone who's in this spot, because I think a lot of people who would watch this would say, hey, I know how to play poker. I get the game of poker, but I don't get the game of money. How would you advise them? So if it was a new person that was coming to you like those 8 did, where would you start with them?
Well, in terms of poker, everything is EV. Mm-hmm. And in terms of investing, everything is EV. And in terms of poker, everything is risk versus reward. And in terms of investing, it's risk versus reward with understanding what your goals are. So if you're a degen and you know you're going to stay a degen, you have to admit that to yourself. You can't, try and put on your conservative investor cloak and then do degen things. Mm-hmm. All right. It just doesn't work.
Right.
So if you're a poker player, you have to say to yourself, am I going to be able to play 2-5 for the rest of my life and grind it out and try and figure out how to pay my living expenses, my health care, my rent, my food, my relationships, my not being able to go on vacation, because when you go on vacation, you take a double hit. You spend money and you have time wasted where you can't make money. And it's hard. Playing poker, making a living is really, really, really hard. So when most people run good for a while and run their bankroll up to a whole bunch of money, the biggest problem that they face is, from what I've seen, when they have a downturn, and it's the same thing in the stock market and the same thing in crypto. When you get lucky, all right, there's no bell that rings that says you're lucky now. And there's no bell that rings that says you're not lucky now. All right.
Yeah.
So you go on a massive upswing, you accumulate a whole bunch of money, you think you're God, you think you're above mathematics, and you start doing things that are just basically nuts. Mm-hmm. And a perfect example is one of those kids, he ran $1 million up to $18 million down to $1 million in a period of 6 months. All right. And wow. I looked at him and I said, you had $1 million 6 months ago. You got $1 million now. And you're on tilt. All right. And not only was the guy on tilt, it took him 3 weeks to lose $1 million. All right. So that's where stoicism comes in, or some of the concepts of stoicism come in both poker and investing. The key to beating any money game is to stay in the now, because there are so many moving parts in both scenarios that you can't look up and say, well, yesterday it was like that. The only thing that counts is what's it like today.
Yeah.
So when you're dealing with stocks, you pick a stock, you have an opinion. I like this stock. I don't like this stock. I like the CEO. I don't like the CEO. I like their financial statement. I don't like their whatever. When you have two pieces of plastic when you're playing poker, all right, your job is to determine whether you like those two pieces of plastic enough to risk your money on them, or whether you take the two pieces of plastic and you just throw in the muck. Mm-hmm. And the problem is that whenever you risk your money, your initial premise is what decides whether you're right or wrong, whether you make money or lose money. So if you play up two pieces of plastic where your EV is negative, you're going to lose money. If you think a stock is going to do well and you make any kind of a bet on it, whether it's a very conservative bet or a very risky bet, you're going to lose money. The key to options is A, to mitigate risk, and B, to create leverage with the least amount of risk. So let's take a stock in simple terms. Let's take a stock that's selling for $50. And let's say that you think this stock is going to go to $80 over 6 months, let's say. That's your premise. Okay. So you could take, you want to buy 100 shares. Okay. So you could take $5,000 and buy 100 shares. And now when the stock goes to 80, when you're right, you make $3,000. Now, what options gives you is the right to form a contract with someone that disagrees with you. All right. The brokerage is the middleman. He's the one that makes everything legit and contractualizes it. So basically, when you buy or sell an option, you're either buying time or selling time. And that's all you're doing. So it's easy to look at it in terms of a stock, but imagine if you owned the house and your house was worth $500,000 and you paid $100,000 for it 10 years ago. And now you're saying to yourself, I don't want to sell my house. Where am I going to live if I got to buy another house? What could I possibly do? Believe it or not, you could actually find someone to pay you, let's take a random number, $75,000 up front for the right to buy your house in, let's say, a year at $500,000. So they would be thinking that the value of real estate would be going up over that year more than the $75,000 on the $500,000. And if the value of your house went down, you just get to keep the $75,000 because they're never going to pay $500,000 and they're going to let their option expire. Same thing with stocks. You own a stock. Somebody owns that $50 stock. Okay. They may decide that they want to sell someone the option to buy that stock at, let's say, $65. And you can take all of that data, which is what you want to do. You want to, let's say you want to sell the rights to that stock at $65 for X dollars. You just go to your chain on Schwab or wherever you invest, and it will give you a price for every expiration date that they have. And all you're doing is you're selling time. And in a long-term EV sense, the guy that's selling time is the one that makes money. The guy that's buying time most of the time ends up being the sucker, unless you have a FOMO bull market forever. I mean, sure. When things go to the moon, the guys that are buying time are, they look like geniuses.
Right.
But buying time is expensive. So with that $50 stock, you could have made $3,000, all right, on that 100 shares. Now, you could have bought an option, let's say a $60 option that expires in 10 months. And you could pay, they probably charge you like, depending on how volatile the market thinks the stock is, maybe you'd pay $3. So when the stock goes to 80, it's cost you $3, and you have the right to buy it at 65. So your real cost is 68. So you're making $12 when it gets to 80. So you're forexing your money. All right. Whereas before you were 60%ing your money. Okay. That's a huge swing. Plus you only risked $300. You risked $3 a share for 100 shares. The other way, where you buy the stock, you've got 5,000 real dollars locked up for however long you want to keep them locked up until you sell the stock. And that, in a nutshell, is the function of options. I mean, there's other scenarios where my preferred case is that when I like a stock, I find the price below where the stock is selling, and I sell someone the right to force me to buy the stock at that lower price. So if, for instance, let's say you have an opinion on DJT, which is Trump social media, and you think, and that's really one of the most volatile stocks there is.
Yeah, it is.
I mean,
it is.
I mean, so if you have an opinion that they're never going broke, I mean, they're just never going to go broke. I have it up on my screen here. You can sell the $19 put that expires in February and get paid about $3.50.
So Paul, help me understand. If I'm forcing someone to buy at a lower price, you're saying I think it's going so low that
that's what they're saying. That's what they're saying. They're the ones that are buying the put. You're selling the put. Okay. So when DJT right now it's at about $28.
Okay.
So you're putting yourself in a situation where the worst that can happen to you is that you own DJT at $15.50, because they're forcing you to buy it at 19 and they're paying you $3.50 up front. Yeah,
I guess I don't understand. What's their advantage?
They think it's going to zero.
I see. Okay, so they think
they're guaranteeing they're paying $3.50, and if they're right, they're going to make $15.50 on their $3.50.
I see. Okay, that helps me.
All right.
So they think it's going so far below that they're actually going to make a big profit by selling it to you.
It's all ego. Everybody thinks they know something.
Okay.
All right. And the purpose, as I see it, it's the same thing as in poker. You want to make sure that the live ones at the table are happy. All right. If you want to overplay a hand against somebody, overplay it against a live one. You don't overplay it against a reg. So, you want to make sure that you find people that are live ones. And those are the ones that have extreme opinions. Like Trump wins the election. Before Trump won the election, it was like, oh my God, the world's going to fall apart if Trump wins. Well, guess what? It doesn't matter who wins. The world's going to go on. And when you die, it doesn't matter because you won't know anything. I mean, we don't, like I say to myself all the time, I have no idea if I'm really here. I have no idea if you're really here. Is it all in my head? Is this just a game that we're all involved in and everybody's got their own game? It's great. Money is the equalizer.
Hold on, Paul. You have to disclose right now. Are you stoned right now?
No.
I'm just kidding.
Well, I take 5 mushroom pills every day.
I'm just giving you a hard time.
It's okay.
I'm just joking. So I want to ask you about this because we were talking through, for those of you watching right now, Paul and I were just corresponding through email, and you made this statement in one of your emails that I thought was really good. It really, I think, Tom, you would 100% agree with this, but you said patience is the long-term winner. And what are the best ways to apply that? I can think of a bunch, but I want to hear from you. Like, how do you apply that most commonly in your life?
Selling puts.
Okay.
Well, see, patience involves just waiting. And the advantage of selling options, whether you're selling a call or selling a put, is that as time goes on, the premium for the option deteriorates. All right. As you get closer and closer to the expiration date, the premium becomes 0. Okay.
That makes sense.
So if you sell a $20 put, for instance, doesn't matter where the stock is. If the stock was $20 when you sold the put and it's $20 when the expiration date happens, you just keep the premium. And like with DJT, if you do the math, the expiration is February 21st, which is about, 90 days more or less. Okay. Which is a quarter of a year. And you're getting paid $350 on a risk factor of 1550, which is like 23%. I mean, you're making 90% a year. You just replicate that. You replicate that 4 times. So or even 8 times, as every month passes, you simply redo what you did on the next month's expiration. Yeah. And at the end of a year, you look up and you say, holy shit, I just made 90% on my money. I mean, and every once in a while you have a bomb where, the thing actually goes to 0. Right. And the key is to understand that every once in a while you get one outed, and that's just the way the world is. I mean, you can't control that. Yeah. In poker, your only job is to get your money in good. There is no other job in poker other than to choose good games. Yeah. In investing, it's the same thing. Your only job is to get your money in good. So if you find a stock that's paying an 11% dividend and it's in, you can't know, but you really believe it's never going to go broke. And then you can like a pipeline company, or you can hold on to it for God knows how long, and it's going to just go through its Fibonacci thing and eventually get back to wherever it was, maybe a little higher, a little lower. If you're collecting 11% a year, you compare that to the safest play you can make, which is, buying government bonds. You're crushing, absolutely crushing it. Yeah. And in poker, I hate to say this, but the good playing nits win, period. You cannot beat a good playing nit. Okay?
That's Tom's nickname, by the way.
Well, my nickname is, besides being called a pain in the my nickname is the old man coffee.
Okay.
So, I mean, whenever I sit down at the table, I tell everybody I'm 80 because, that sounds much better than 75. Sure. And then I make sure that everybody's jovial and talking to each other. I ask people questions. People love to talk about themselves, as I'm demonstrating here. And sooner or later, I find out what everybody does for a living. And more than a dozen times, I've had people hire other people at the table while we're playing.
Really?
like,
Interesting.
yeah. Oh my God, you're a carpenter? I've been looking for a carpenter for a year. Give me your phone number, blah, 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 blah. And the guy has a job. I mean, it's really crazy how well knit the poker community is when it comes to real life, especially in small games. And it's a lot of fun. I mean, just a lot of fun. And, I mean, I play poker more or less the way I trade options. In my mind, position is, other than game selection and controlling your ego, position is the number one most important factor. So whenever I play any hand in the first 4 positions, I limp. And I know that's contrary to everything that everyone's taught, but it gives me an opportunity to see a lot of flops in passive games because low stakes players make a ton more mistakes post flop than they do pre flop. Right? I mean, you make all your money in small games by people basically handing you their money. I mean,
it's a good statement. I would agree.
And when you get to the cage, they do not ever ask you how many pots you won.
Right. Yeah, absolutely. Tom, I know you've taken a similar approach often where you've been like maybe not as limp heavy, but certainly like very passive in early position and all that. Would you agree? I mean, would you agree with that statement as far as the games you're playing, that's the same thing you're finding?
Yeah, I would say so.
How often are you seeing either of you guys? How often are you seeing like egregious pre-flop mistakes from an opponent?
Pre-flop?
Define egregious.
Well, I guess egregious to me. Occasionally you'll see the 5-8 offsuit flipped over and stuff like that. I'd say it's pretty rare, but how often do you guys say you're seeing stuff like that?
Well,
the 5-8 offsuit.
Go ahead.
The 5-8 offsuit. The idea when you limp is the best scenario would be to have it go limp, raise, call, and this time you have ace king suited. All right. So the games that I play in, most of the time the raise size is 5x, the opening raise size. So I mean, if it went limp, $10, I mean, I'm going to make it like $90. And the most egregious pre-flop mistakes are, last night I actually played and a pot like that came up and it ended up going 4 ways to the flop. I mean, it was like, what on earth is going on around here? I'm at the bottom of my range here with ace king suited and nobody gives a shit. And, one of the hands, believe it or not, was 6-3 suited.
Wow.
That's pretty egregious, but yeah, it was a good game.
That is pretty bad. Yeah, I would say that I definitely see some pre-flop mistakes, but I would agree with you that the worst ones are the ones where they have a piece, but they don't belong playing for their stack, but they'll make that decision because they have the piece. But Tom, I want to hear what do you think?
They're getting pot odds.
Yeah, exactly. Pot odds. Right. Tom, what do you think? Pre-flop, post-flop, where are you seeing most of the mistakes, and what are you looking to exploit there?
I would say there are probably more mistakes pre-flop, but they're more expensive post-flop.
Okay.
Right. So as the pot gets large, you're gonna have people that are in there where they're they got 2 outs, and they're putting in half of their stack.
Right.
Or they're drawing dead and they put in all of their money.
Yeah.
I mean, I've seen ones where people are drawing to straights where somebody already has a flush. And this is or somebody is, got one card, let's say got the king of spades, but somebody already has an ace high flush and they're putting in all their money. That's just
hoping to hit.
Right.
Yeah.
Yeah. And so
good games. Sound like good games, Tom.
Yeah. But sure. But I think part of it is, people came to the casino to do something.
Sure.
And I think doing something is super dangerous.
Yeah. That's back to what Paul was saying. I mean, that patience, right? Where if you lack that patience after a while, it's really hard to fold for 2 hours. So
Right.
if you've been patient for 30 minutes, that's okay. That's an accomplishment, I guess. But when you really have to get past an hour or two, that's where it gets tough. And I think, then a lot of the pre-flop ones come up.
But even outside of poker, like I have this discussion with my wife all the time where she's panicking about something and I'm just like, we shouldn't do anything. And then then a few days go by and it was like nothing happened.
Yeah.
And then I tell her, like, that's my wheelhouse, like doing nothing.
Yeah.
But like 90% of the time, I would say, at least 90% of the time, it's like whatever the problem is, it's just blown over or it's become crystallized so that you know what to do rather than running around, like, oh my God, like, what are we going to do? We should do this, but without really thinking about like what we're doing. Right. So.
Oh, absolutely. And Paul, if I throw back to you with stocks, I mean, wouldn't you say that's exactly where most people lose their money in the stock market is just what Tom defined, that like 2-day window where, oh my gosh, it dropped 5% today. The market's going to implode, sell everything. I got to get out. Just to have
pretty close
the next day. Yeah.
Pretty close.
Yeah. Or, no, it's at all-time highs, pile all your money in.
Yeah.
Just to have it sell off the next day. Right. So.
Well, I mean, the situation you're describing with all-time highs, all right? Mm-hmm. A lot of the times, the FOMO that's driving all-time highs will also drive premiums on selling calls through the roof also. Mm-hmm. So, I was just checking NVIDIA. And so NVIDIA's at like 142 or something like that. And so I checked out, what would it cost to buy an NVIDIA $175 call that expires in June. All right.
Okay.
And it costs like $20-something. All right. So I'm sitting here saying to myself, my word. So NVIDIA has to go from 142 to 200 for you to break even. I mean, they may all be right. Maybe NVIDIA's good. One guy had a forecast, NVIDIA's going to be 300 at the end of 2025. All right. Respected, whatever. And it's like, okay, so NVIDIA is going to be worth $4 trillion or whatever it is. How on earth do you quantify something that's going to be selling for 75 times earnings or 100 times earnings or 200 times earnings? It's like, it's like playing poker where Polish straights win. For those of you know,
I don't even know what Polish, that is.
2, 4, 6, 8, 10.
Oh, okay. Never heard that one before.
Well, I mean, it's just, it's amazing. Yeah. And the beauty of it is, sadly, that many degenerates are brought into the stock market not understanding the risks that they're taking. They say free money. And anytime you hear free money, you should probably just, turn away. I just watched a video about some guy that was calling what Trump is doing the equivalent of 3-card Monte. And he's an anti-Trumper.
Right.
But he said, basically the guy knows what he's doing and he's in charge of the game. And you're just here to be distracted so that you're never going to figure out, where the queen is under those shells. And he's probably right. And that's what's going on in the stock market. You just have all these, everybody's got an agenda. Everybody makes money when the market's going up. In my experience, you have to look at what the really, really, really smart people are doing and understand that they're doing it for a reason. They're not doing it just because things hit their all-time high or they hit their price target here or whatever. When I see that Warren Buffett is getting into cash, I pause, I look up and I say, he may be 150 years old, but he knows something. Yeah. I don't know what he knows, but he's acting on it, and you better take care.
Yeah.
And that's about where I think things are now. And I subscribe to 3 or 4 different advisory things on Seeking Alpha, and the best of them in an overall view with regards to the stock market and oil and precious metals is a guy named Avi Gilbert. It's not cheap. For some people, it would be not cheap. I think it's a steal. He charges you like $1,000 a year for the basic general stuff. And he uses Prechter analysis and Fibonacci waves to basically make most of his predictions. He has been so spot on over the last 2 years. It is scary. I mean, really scary. And he is a very much in the now person. He's constantly lowering and raising his price targets based on, if this happens, this is the price target. If that happens, that's the price target. And, he deals with floors where if you break the bottom part of the floor, he readjusts the next floor and then readjusts the next ceiling. And right now we're about a quarter of a floor away from having the Bears take over. And if they do, that will be one of the most interesting experiences you'll ever see in the stock market. Because if you take a look at the long-term chart, I mean, since 2020, it's just parabolic. I mean,
absolutely.
It's insane.
Yeah.
And it's like, you need new money in order to fund new highs. And there's a lot of people, as you go stepping stone down, they get the shit scared out of them and they just do what you were talking about. Oh my God, my stock went down $5. I'm going to sell everything.
Yeah.
There's a lot of people like that. There's a lot of people that have a whole bunch of profits that they look up and they say, I got to protect my profits. I'm going to sell. And so just like buying gets more buying, selling begets more selling. Yeah. And those are the times you want to be just sitting back like Tom and just waiting and having patience and letting things run their course. And, who knows where things could go.
Yes. Let me ask you this, Paul, because there's a common discussion right now about whether we will see a giant breakdown because things are so high. Like you're either going to keep going up for forever in a great melt up where just inflation pushes everything up forever, or you hit a breaking point and it collapses. Of those two scenarios, do you have one that seems more likely in your mind?
Both. I think different sectors will experience different outcomes.
And in what sectors do you see most probable to see the melt up versus the meltdown?
I see, depending on what happens in the world in terms of the Middle East conflict, I see oil going through the roof because as much as I like seeing Iran being pushed into a corner, once you push them into a small enough corner, they're out there. They could do things that would just, close the Strait of Hormuz, bomb Saudi oil fields. I mean, who knows what the hell they would do?
Sure.
I mean, you've got a crazy person, running that country, and he's an older crazy person that wants a legacy, and unless you can peer into his mind, you have no idea what he's going to do. So oil stocks are really, really, really cheap. And if you look at their books, most of them are profitable even at $40 oil. So that's what I'm looking forward to in terms of it could go either way.
Okay.
But healthcare stocks, I think they're going to get crushed even more from here, because I think RFK is going to get confirmed as the health guy, and you're going to see some wild stuff go on. I mean, who knows? As the banks, a mismanaged bank is quite capable of going to zero in this environment. I mean, it's just, the real estate sector the commercial real estate sector violates my number one rule in life, is that hope is not a business plan. Right? I mean,
Yeah.
it's like, how on earth can you be firing a whole bunch of tech people over and over and over again every day, and having people still work from home, and having Amazon and all these behemoths, downsizing? What's going to happen to all these buildings that they occupied?
Yeah.
That they no longer will have leases for. I mean, it's like, and the banks, people don't look at this. The banks are on the hook for all this crap. All right. It's not like you have a personal loan on these things. I mean, the banks have collateral, and if the collateral is the building itself, the banks have. I mean, what are they going to do with them? And that's so that's another thing I wouldn't touch. And,
are you expecting? I'm really curious to hear what I've thought about this a lot, but so many people are talking about that commercial collapse in real estate. What impact do you see on the like individual real estate market when it comes to just like residential side versus the commercial?
Well, it's very geography oriented. All right. The mispricing of houses in major cities is crazy. And it's like, if you go to rural areas in the middle of the country, it's not crazy at all. There are actually some pretty good deals out there if you want to live there. The problem is, if you keep on having inflation, and it looks like we're going to, and interest rates don't come down, and I don't see how they can in this environment. The market's telling you they're not coming down. You look at the bond market, and it's just doing the exact opposite of what the Fed is doing.
Absolutely.
If home affordability, at some point in time, it's like a war between the people that are putting their houses up for sale and the people that are the buyers. Mm-hmm. I mean, I have a house next door to me that was on the market for 3 months. The lady wanted $750,000 for it. And 2 years ago, the house was worth maybe $400,000. And she's had 3 people try and buy her house, and all 3 couldn't qualify for a loan. And it wasn't even close. I mean, it just wasn't even close. The banks are not stupid. All right. They got destroyed in 2009. And they have, I hate to say this, I never thought they have learned their lesson. All right. They're not going to let, yes.
Do you?
Like in 2009, your dog could have gotten a mortgage.
Yeah, that's
right.
True. Yeah.
I mean, I know your dog may have died, but your new dog is not going to get a mortgage. All right? It's just not going to happen. I mean, it's crazy.
Yeah.
I mean, and I bought my house in 2000. I moved here in 2009 to the Vegas area, actually Henderson, and that was in February. I lived in LA for like 50 years, and every year the traffic got worse. Every single year. Last place I lived was in Fullerton, which is about 11 miles from the Commerce Club. And I got up on a Tuesday in February, Tuesday night at midnight, and I said, I'm going to go play poker. So I got in my car at midnight, and I got to the Commerce Club 11 miles away at 2:15 in the morning. And I looked around and I said, where are all these idiots going? What is going on here? Where maybe there's an accident. Nope, no accident. So I played my session. I came home. I gave my wife a list of 5 cities. I said, here, pick one. We're moving. All right. And turned out her best friend lived in Vegas. So she says, I want to go here. And I said, okay. So I sent her to Vegas to go find the house. She must have looked at 50 to 100 houses. Everyone was trashed. The walls ripped out, the wiring, the toilets full of cement because people were pissed off. And it's amazing. And they had a law out here in Vegas, which I didn't know, that if a house does not have a sink and an oven, it is deemed unlivable. So a lot of the times they pulled the oven out and sold the metal. All right. So the house was for sale, but you couldn't buy it because it was illegal to buy it. So your choices were, you could put in the sink in the oven and pay for that. Yeah. Then the house, and you could buy it, but then so could everybody else. All right. So
Wow.
that was not an option.
Yeah.
So finally, after a month, we found a guy that had a house that he paid $950 for, and I bought it for $305. And he said, thank you.
Wow.
Thank you very much. All right.
Wow.
And that to me was probably the most shocking thing I've seen in the real estate industry on a personal level.
Yeah.
And I don't know if we're going there again, but I don't see any argument to where we're not going to get there. All right?
Well, because once the commercial side begins a real breakdown and stuff is getting cheaper and cheaper and cheaper on that side, there's a lot of income attached to all of those, right? That then transfers into the residential side to where people are going to be, if that was, if I'm retired and that's my income is, hey, I've got like 3 commercial buildings and all of a sudden I owe on all, or maybe I don't know, but I have no income and I can't even like keep the lights on at those buildings. Now I'm forced to sell into this, take a loss. Now I have no income. Now maybe I need to downsize my house. I think that cascade effect can hit the residential side, but I'm not an expert. It's just my 2 cents.
You're right on. Most older people want to downsize.
Mm-hmm.
The problem is the older people have mortgages between 2 and 3% on the houses that they own.
It's
right?
a loss to
So
downsize.
if they sell their big house to buy a small house, their mortgage is higher
Yeah.
on the small house than it would be on the big house. And most of the time, they don't even have a mortgage on the big house.
Yeah.
All right.
Yeah.
They may have paid it off. So you've got no houses on the market on the mid-range to upper end. And you've got all these people that are trying to buy a house they can afford on the lower end.
Yeah.
And turns out the lower end, they can't afford to buy where the lower end is.
Yeah.
So, like I wanted to, I don't drive too good. If I was a passenger, I would not get in my car. And so even though it's only like 12 miles from my house to South Point, where I play, I was looking at buying a condominium right near South Point. And it turns out, they're so overpriced. It's crazy. They're like $350 a foot for, an 800-foot condominium. And I just sat there and I said, oh my God, that's terrible. And then there's a $250 a month association fee. All right. It's like, who's going to buy this? I don't know, I know it's not me. So the real estate market is really out of whack. And as a poker player, you've got a real problem if you're trying to figure out where to live.
Yeah.
Your best bet is to find 3 other poker players and get an Airbnb. That way, at least you can split the rent 4 ways as long as you all trust each other, and you can actually prepare food in the Airbnb so that you don't have to spend, $50 a day to eat out in restaurants, and that's on the lower level. And then poker players also have health care. They don't understand. If you have an accident or you get sick or you fall off your bicycle or motorcycle or whatever the hell you're driving and you go to the hospital, you're broke. Your bankroll doesn't exist anymore.
Yeah, for sure. Tom, in Canada, speaking of all the real estate stuff, Canada basically looked at our real estate prices and said, here, hold my beer, eh? Did they not?
Yeah, actually, I don't know if this website site still exists, but there's a website, used to be one, might still exist, called Crack Shack or Mansion. I don't know if you ever heard of this website.
No, I don't know what this is.
But it's, okay, so they have pictures of houses.
Okay.
And you have to decide whether or not this is an actual crack shack. So like literally like crack people live there. Yeah. Or whether it's $1 million+ house in Vancouver, British Columbia.
Okay.
And I think there were, on the first, there's Crack Shack or Mansion 1 and there's Crack Shack or Mansion 2. Mm-hmm. And I think there was like 20 or 25 houses. And I was right like 63% of the time or something. like honestly, like because people are buying, like the prices in major Canadian cities are absolutely ludicrous because we didn't have 2008. It didn't really happen to Canadian real estate. So it just kind of flatlined for a bit, but didn't really go down. And then it just started moving up again. And then, over COVID, it started going up even more. So like houses amazing houses you can get in the United States, you get pieces of junk here for basically the same price. It's just it's horrible.
Do you know what the Canadian, I've never taken the time to look, but do you know what your like annual inflation rate is up there?
The actual inflation rate or the posted inflation rate?
Either one.
It's about this. It's usually about the same as the U.S., but it's about as deceptive as the U.S. one.
Okay,
so our government is about as deceptive as the U.S. government when it comes to that kind of stuff.
Right. When they're like, oh, it's only 3%, but it's like 15.
Yeah. It's like, but that's because yachts have only gone up 1% this year. It's like, I don't own a yacht.
Right. Right. Yeah, and the higher it goes, the more you have to adjust the numbers, right?
Yeah.
So, yeah. Interesting. Well, Paul, I'm going to throw back to you really quick. I want to jump back to the options piece. So I just want to make sure I'm understanding this correctly. Let's say I'm selling that contract, and I'm saying I think NVIDIA I think it's going to be like around 170 at the best, and the other guy's thinking, he wants it. It's going to be a deal. He thinks it's 200 to 300 or whatever.
You have to own NVIDIA. You have to own NVIDIA stock.
Right. And
in order to sell the call.
Right.
Okay.
And so then I'm going to
you have to own 100 shares of NVIDIA in order to sell one call contract.
And so it's not the point where it hits that number. It's the date that it expires. He gets to choose whether or not he purchases.
Right. Or any time before that date.
Oh, okay. Okay.
All right. He's got the option
to purchase that entire
to do that deal.
I see. Right. Okay. Cool.
And since you own the stock, you're obligated to sell him at that strike price that you agreed on. Since you've already collected your money on it.
And you sell more calls or puts? You said you sell more puts?
I sell puts as an initiating strategy.
Got it. And
whatever stocks I do own, once they go what I consider to be a little bit parabolic, I sell calls against them at an upside price, where I would not be sad if somebody bought the stock from me for that price.
Okay, that makes sense.
And it's anti-FOMO to an extent.
Mm-hmm. Yeah. I really like that. I'm my portfolio is very limited. I'm not at the point where I have 100 shares of anything yet, but heading that direction. And so let's say I just got there or just made it there for the first time with a stock. How would you advise someone who's new to it to get started? You kind of shared with me, but for the audience listening, where should they start if they want to kind of dip their toe into options? Like, what's the best starting point?
All depends on your goals. All depends on your age. All depends on your bankroll. You should only be using options if you have something to protect, or if you have a strong opinion and you don't want to risk a ton of your bankroll on that opinion. So, I mean, if I was young, I would be piling my money into selling puts on crypto miners like Cleanscape or Hut Mining or Mara or Riot or a bunch of those. Mm-hmm. But I would wait for Bitcoin to take its next leg down in terms of a bull market wave. It's not, Bitcoin's really cool. I mean, it's a great trading vehicle. I mean, not so much in Bitcoin itself, but in the miners. The miners overreact on the way up and they overreact on the way down. So Bitcoin at 91,000 now, if Bitcoin took an inconsequential, perfectly normal dip down to 60,000, all right, your $14.10 clean spark would probably be at $7. All right. And the premiums on CleanSpark are off the charts. I mean, actually, the premiums on all the Bitcoin miners are off the charts, strictly because there's so many young people that have so many drastically different opinions on, where Bitcoin's going in a month, where Bitcoin's going in a year, where it's going next week. I mean, it gives someone that wants to make a bet a chance to make 150%, 200% on their money over the course of a year, as long as they're not wrong about Bitcoin going to zero.
Mm-hmm.
All right. I mean, it's the major expense for Bitcoin miners is electricity, and it's going to be really, really, really interesting to see how that plays out, because our power grid is, let's just say, not perfect.
Yep.
And there's definitely not enough energy in Canada or the United States or Europe or anything to support a shift to electronic money. It just, in terms of crypto, it just doesn't exist. There's just not enough energy.
Yeah.
And that will keep the price of Bitcoin elevated, I think. And the thing that I don't understand is when they produce 21 million Bitcoin, what the hell happens then? I mean, then there's no more Bitcoin.
Yeah.
But we'll see.
Yeah.
You guys are going to live a lot longer than I am, and you'll have a lot more fun going into the future than I will. So,
man, I think Bitcoin's just it. We could spend so much time going down that rabbit hole, but I think the piece, we were kind of talking about this ahead of time. I think the piece that's overlooked by the majority of people that are interested in Bitcoin is the base layer of money and how we're actually transacting and using that as a medium of exchange, or also a way to just like protect wealth in a system that's overprinting the dollar. Like I guess I didn't realize till probably 5 years ago that if I'm not doing something to protect my money, it's constantly being stolen very slowly from me through inflation. And I just was unaware. I was taught not to worry about it. Prices always go up, all that stuff. And then when I began thinking about it and reading about it, I was like, this is how are we not all educated and upset about this? But if you educated the public at large about it, they would be furious, right? That, hey, wait a second, our government is constantly stealing from us.
It all starts with school. There's no financial literacy taught at any phase of school below college.
And that's on
and
purpose.
what they teach you in college is garbage also.
Mm-hmm.
But if you really want to experience why Bitcoin's going to have a hard time being used as real money, I have not had this physical experience myself, but somebody else has that I talked to. Go into a grocery store and have there be a power failure and see what happens.
Mm-hmm.
All right.
Mm-hmm.
It is crazy. They can't sell you anything.
Right.
They can't open the cash register. They can't get the inventory deducted with their barcode.
Mm-hmm.
They can't sell you anything. Even if you have cash, you can't buy anything. They won't take your money. And so if we have some kind of a power failure that's a whole city or a whole sector of the country, cash is king. You should always have a certain amount of green cash for just in case. I mean,
I got to tell you guys a funny story. The other day I went and I bought pizza I had a bunch of friends over to play cards and bought pizzas for everybody. And I paid cash, right? The guy you could tell he gets the card reader out. He's ready to ring me up and stuff, and was surprised. It's now a surprise to get cash, but he owed me whatever amount of dollars and 48 cents. And so he counts out the dollars very quickly. And then he stares at the change drawer And he looks up at me, and then he looks back at the change drawer, and I'm like, oh, come on. This can't be that hard. He grabs a quarter, and I'm like, okay, you're off to a good start. He grabs a nickel, and I'm like, interesting choice. He grabs a dime, so he's up to 40, and then he stares at his hand for a second, back of the drawer, back in his hand, back of the drawer, and he's like, I got to find a way to get there, and finally pulls another nickel out and 3 more pennies and hands it to me, and I'm like, whatever, that's fine. I've got the change, but amazing that, you know, like even with the number there, no math required. The number's on the screen. Just putting 48 cents together was like, there's so little interaction with cash now in society that it was like I'd given him a puzzle to solve, you know? So yeah, wild. But I do agree with you. I think there comes a point when all that stuff goes down where, how do you interact? Yeah, definitely. Yeah. What do you where do you see, because the money printing curve just goes parabolic. Like as you see currencies fail, you watch that like parabolic rate of increase. And like, where do you see our currency going over the next 10 years? Because I could see it has this unique place in history.
Over the next 10 years?
Yeah. Well, it has a unique position, right, where it has a reserve currency status, but it's losing it. It's being printed like crazy. We're running massive amounts of debt. I'm curious to hear what you think.
All right. We're not the only ones printing money.
Correct.
Every single economy probably on earth where the government has a printing press, they're printing money. Mm-hmm. And the most destructive part of inflation is what most people have no clue about. All right. If you have 2% inflation a year, all right, that compounds. It's not like, oh, great, prices aren't going up. Bullshit, they're going up 2%. And that's on top of the 9% and 3% and 2% and 5% that they may have been going on, that's been going on for God knows how long. All right. So when you were talking about 5 years ago, you realized your money is depreciating. You're darn right it's depreciating. Yeah. All right. It's depreciating, and then it's depreciating more on top of what it already depreciating. All right. So the only thing that money is good for is buying stuff. All right. When it comes right down to it, you know, as versus bartering for stuff. So you get less stuff for the same money now than you did a year ago and you did 5 years ago. So the only thing you can do to protect yourself is to try and make more money than whatever the inflation rate is for the period of time that you're talking about. And it's impossible for currencies to not devalue unless you have deflation. All right. Deflation is taking away from the inflation that's already occurred. Okay. So if we had 3% deflation for 5 years, that would probably come to about 13% total after you wash everything around. So prices would be 13% cheaper than they are now. All right. Well, guess what? Most people won't notice every year that their prices are going down 3%, right? But they sure as hell notice when their prices are going up 3% from already the overpriced situation that they find themselves in, all right? And the number one savior for all of this, unwittingly, would be if we had an oil boom and we started producing oil like nuts, which is not going to happen overnight. But if the price of oil goes down to $40 to $50 and the price of gas goes down $1.50 or $2 a gallon, all right, that is deflationary enough where it will affect everything else and you will have deflation. And deflation is good for savers and it's horrible for borrowers. Right. So since most of the country is hooked on borrowing, all right, it's bad for them because they're going to have to pay back their borrowed money with real valued dollars rather than fake money that they'll be able to pay back in 15 years. That's why people love buying houses and love getting mortgages and love getting the write-off, knowing that, you know, it's almost impossible for their house price not to go up because there's just more money floating around. And
so Paul, would you say that it was interesting your thought on like you have to make more? Because I know a lot of people are like, hey, we need to invest in these assets that are going to keep up with inflation. Would you mix those things, or would you actively be pursuing that greater income as your primary goal? Like, so for example, like if I put 10 bars of gold in the closet or whatever, I'm not gaining anything, but I'm not necessarily losing value relative to my purchasing power. But if
that's just a bet. That's just a bet on gold. All right, you've got a rock in your closet. All right, it's how much are people going to pay for that rock? All right,
right.
In 5 years.
So,
you don't know.
But your strategy is more around this like options trading or doing something proactive that is
dividend investing and options trading.
Yeah. Okay. Yeah.
All right. Dividend investing is the best way to crush it, as long as you're patient. Just pick great companies that can't go bankrupt, that pay you anywhere from a 6 to 11% dividend, and just sit there. Unfortunately, the younger generation is not going to do that. Mm-hmm. They're not like Tom. They don't have the ability to just sit
there. And Tom, I can't remember. I know you do some investing, but are you in dividend payers and stuff as well?
Yeah. Mostly, yeah.
Yeah. Nice. Yeah. It's funny. For the guys that I talk to who are like my age, it's very rare to find someone that has that same opinion. Like most people are like, yeah, I'm trading, or yeah, I'm in the markets, but they're not like, so few people are just doing the Warren Buffett buy and hold, buy and hold. So,
well, you have a great correlation in playing poker for a living and trading options. 95% of day traders go broke, and 95% of poker players lose money.
Yeah.
All right. So, and it's all based on the same principle. All right. Both are lack of discipline and lack of patience. I mean, and being delusional in terms of thinking that you're actually going to make money doing this stuff.
Yeah. Yeah. And having the opinion that you're outsmarting the market while you're doing it, right?
Yeah. And if you can't do it now, imagine how people were 8 years ago when the commissions weren't zero.
Jeez,
all right.
That's a great point.
I mean, they were paying $6.95 a trade. I mean, just that's like playing 1-2 and the rake's $11. Right.
Right.
Hey Tom, what's that like?
Is that what rakes are in Canada?
It's 10% up to
what?
Yeah, 10% up to $8 plus $3 for various promotions.
Yeah,
so it is $11.
You nailed it. Yeah, you nailed it, Paul.
I was only kidding.
Yeah. And Tom still manages to squeak out a living with it.
Small profit.
Yeah. So, yeah.
Yeah. Well, just remember, you're being treated like a charity. People give you their money, and I'm sure they smile.
Right. Yep. Okay. Well, I don't want to go too much longer. So let me see which question I want to roll us with here before we wrap this thing up. Okay. I want to go back to, you talked about bankroll management, and I think your thoughts are really good. I want to hear just a little bit more if you can share with our audience. So,
okay. Are you guys familiar with Mike Carroll?
Yes.
I know who he is. I haven't read a bunch of his stuff, but I do know who he is.
Okay. He was the foremost teacher, for lack of a better word, on position and bankroll management, and happy tables make for good games. All right. So one of the things he used to do is he used to sit down on the table. He'd look around. He'd take out a $5 bill or a $10 bill. He'd light a match and he'd burn it. All right. So they called him Crazy Mike, and he really did those things. And or another thing he might do is we were playing, the games were either 5-card draw high or 5-card draw low, and he would be playing 5-card draw high, jacks or better to open, and he would play a hand, and somebody would bet, and he would call, and his hand would be 4 spades and a heart with no pair, right? And people would look up and
call with it. Is that what you said?
Yeah, people would look up and they would go, "Wow, what a dork this guy is!" And 8 hours later, he'd have all the chips.
Yeah.
And so, what he says is, the smaller your bankroll, the more you should gamble. The bigger your bankroll, the more you should play protect, protect, protect. So, in terms of investing, you should never have more than at most 20% on any position, even if you thought you got a tip from God. All right. You just should never be risking more than 20% of your bankroll on any one opinion. All right. That's where egos destroy bankrolls. And, between ego and tilt, one leads to the other. Ego, using your ego too much causes tilt. And once you're on tilt, you're basically toast. So the idea is somehow to protect yourself from your own emotions and understand that position in poker trumps everything other than game selection. And in investing, controlling your ego and doing your research is the most important part of investing. You don't ever want to go broke. I mean, if an old man like Warren Buffett can say rule number 1 is don't lose money and rule number 2 is see rule number 1, I mean, that means a lot.
Yeah.
The guy may be boring, the guy may be whatever you think he is, but he early in his life learned how to make a ton of money. And it's patience, 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 patience. I mean, he has positions now where people laugh at him. And I'm sure that, his trust will have those positions in 10 years and the trust will be the one that's laughing.
Yeah.
It's a hard game. It's really a hard, if you make it complicated, it's a hard game. If you play poker and you have FPS, and you apply FPS to your bankroll strategy, it'll even become a harder game. That's fancy play syndrome. And, when I play poker, I just do it to socialize and discipline myself to be able to throw away the 2 hours worth of hands that you were talking about.
Yeah.
So I'm most proud of myself when I can sit there for 2 hours and play 3 hands and go home.
Yeah. Yeah. It takes immense amounts of discipline. How do you check your ego as somebody who you've had a lot of big swings up and down and a lot of resources at your disposal and stuff? How do you still check your ego when you're trading and when you're playing and stuff?
First thing I do when I wake up is I get up. It takes me a couple of minutes to get up and stretch and all that. Look in the mirror and I go, "You're a moron," and I go on with the rest of my day.
Okay.
That's my number one thing that I do every morning.
That's the strategy.
And
okay.
You've got to understand that your whole concept of what you know is only what you know. Yeah. And you have no concept of what you don't know.
Yeah.
So, it's the old phrase that's overspoken. You don't know what you don't know, but it's true.
Yeah. So, you're not really, even though it's kind of funny, you're not necessarily joking when you say that because you're trying to remind yourself, hey, I don't know it all. I don't have all the answers. I'm going to make mistakes. I need to be careful with what I'm doing. Right.
Yep.
Yeah. Okay.
Yep.
Okay.
And that's, it's when you're wrong and you look up and you say, I'm not wrong. They're wrong. You're going down the road and everybody else is coming at you. I'm not going the wrong way they are. Yeah. That's when you get yourself in real trouble.
It reminds me of The Big Short when you watch the Michael Burry character just sitting there like, I know I'm right, losing millions of dollars. And I think it takes stones, but that wasn't guaranteed to work out for him either.
That's right.
So he's the hero in that, but it easily could have been that he did that to his own demise, so.
Sure.
Yep.
Yeah. Pretty wild.
You can make the right decision, but at the wrong time and it wipes you out.
Absolutely.
Right. You could ultimately be proven right, but that doesn't matter if you've already run out of money.
Yeah.
That's 100% true.
What's the saying? The markets can remain irrational longer than you can remain solvent.
Yeah.
Yep.
Yeah. So cool. Tom, any other thoughts before we wrap up?
I would just like to kind of link some of these things together. I think
Yeah,
a lot
please
of the
do.
problems with both investing and poker is that people have sort of like an all or nothing approach to things. So things are like take elections, for example, 0% of this thing happening, 100% of this thing. People don't think like, there's a 30% chance of this and a 60% chance of that and a 10% chance of that. They're like, everything is just all or nothing. And I think that also causes people to have tilt, because in their mind, they're thinking like, this is going to happen 100. I'm going to win this hand 100% of the time. And it's like, no, you're going to win this hand like 90% of the time, which means 10% of the time you're going to go on tilt. And if this keeps recurring over and over again, eventually you will hit that 10%, right? That's guaranteed. And so, and there are just so many things in life that are like that, where people have a kind of all or nothing sort of thing. And I think it's like good poker players seem to be very good at understanding that, nothing is 100%. Things are, there's a bunch of different possible outcomes, and we should try to weight them as best we can. And if we do that, then we're much less likely to be tilted when, one of these possible outcomes happens, because you understand like a 5% chance of something happening is not a 0% chance of that thing happening.
Yeah, absolutely.
That's where your number one goal or your number one job of getting your money in good comes into play. Right. You don't have any other job. You can only control how you get your money in, whether it's in investing or whether it's in a pot. All right. Once you get your money in good, you've done your job. Mm-hmm. And whatever happens is out of your control, and the 10% of the time that you're going to lose, you remember. The 90% of the time that you win, you don't remember, because you say, oh, I was, that's the way it was supposed to be, So that's why people go on tilt, is they forget about the 90 times that they win, and they only remember the 10 times they lose.
Yeah.
And they go, son of a I'm running bad. Or, how could that idiot put his money in the pot? You want him to put his money in the pot there. Yeah. All right. I mean, when you got aces and he's got kings and you both get it all in, you should just say, okay, I did my job. I'm going to lose 20% of the time. Tough shit. I can't believe how many people get angry and go on tilt and start throwing chairs and who knows what, when their aces get cracked there. Yeah. I mean, you should be looking at the guy and be saying, thank you. I know it's a hard thing to do, but, the guy tried to give you his money.
Yeah. Yeah. So what's funny is that I think it's really easy for us. We get used to seeing it and we get used to going, okay, yeah, that feels terrible, but I know it's going to happen once in a while. But all it takes is like two of them back to back, right? Or it's that second or third one where you go, well, a 5% thing can't happen 3 times in a row. You can't have tails every time,
Right.
Yeah. That's how we lose our minds.
Well, there was a guy that described tournament play. All right.
Yeah.
And he said, do you think it's impossible to win 100 flips in a row? Heads, or tails, whatever it is. He says, you take any guy that won a tournament, that's basically what he did. Mm-hmm. Yeah. All right. That was his time to be the guy that won 50 heads or tails flips in a row. Right. Because when you win a tournament, that's basically how you have to run.
Yeah.
Because, I mean, that's why so many poker players that play tournaments, they go broke. Never seen a guy that plays 100% tournaments and no cash. Maybe Phil Hellmuth, but they almost all go broke.
Right.
I mean, just the overlay, the underlay on tournaments is just so enormous. It's just really tough to beat.
Well, you're chasing statistical improbabilities every single time you jump in there, right? So, yeah, and you need that top because the payouts are so top heavy. You always got to be chasing that super high upside variance, and if you don't hit it, you're in a terrible shape. So, well, Paul, this was fun, fellas. Thanks for getting together and talking. I feel like I could ask you questions for another hour, but I need to go help put my kids to bed. So I'm gonna part ways here and the episode, but we might have to have you back for a future episode again. So
sounds good.
Thanks for coming on and talking options and poker and everything else. And
it's been a kick.
Yeah, we'll have to do it again sometime.